Good day, everyone. So now we will talking about the general information of the Philippine taxation. Taxation is a government mechanism to raise funds. It is a reality that all citizens must contend with for the primary reason that governments raise revenue from the people they govern to be able to function fully. In exchange for the taxes that people pay, the government promises to improve the citizens' lives through good governance. There are the four measures of taxes. First, income taxes. Income taxes are imposed on the income earned by a person or firm. 2. Property taxes are imposed on assets. 3. Sales taxes are imposed on the value of goods sold. 4. Excise taxes are imposed on specific goods or service. The taxation in Spanish Philippines. The payment of tribute or taxes or the obligation to provide labor service to the datos in some early Filipino communities in the Philippines may resemble taxation. The Spaniard altered the subsistence system and imposed by payment of tributes from the Filipinos similar to what have been practiced in the colonies of America. The purpose of taxation in Spanish Philippines to generate resources to finance the maintenance of the islands such as salaries of government officials and expenses of clergy. Exempted from payment of tribute were the principals, alcaldes, gobernadores, cabezas de barangay, soldiers. Members from payment of tributes were the principals, alcaldes, gobernadores, cabezas de barangay, soldiers, member of civil guards, government official, and vagrants. Towards the end of the 15th century, the Manila, Acapulco, or galleon trade was established through the galleons, a way by which the Spaniards could make sure that European presence would be sustained. The payment of tribute was stopped in 1884 and was replaced by a poll tax collected through a certificate of identification called cedula, is by a person and not family. Direct taxes is on 1887. Urbana, a tax on annual rental value of an urban real estate. Industria, a tax on salaries, dividends, and profit. Indirect taxes such as customs duties were imposed export and import to further raise revenue. Taxation under the Americans. From 1898 to 1903, the Americans followed the Spaniard system of taxation with some modification. Later on, the urbana would be replaced by tax on real estate, which became known as the island tax. The land tax was levied on the urban and rural real estates. The Internal Revenue Law of 1904 was passed as a reaction to the problems of collecting land tax. Is prescribed the 10 major of sources of revenue. License tax on firms dealing in alcoholic beverage and tobacco. Excise tax on alcoholic beverage and tobacco products. Taxes on banks and bankers. document stamp taxes, the cedula, taxes on insurance and insurance companies, taxes on forest products, mining concessions, taxes on business and manufacturing, occupational license. Taxation during the Commonwealth period. Income tax rates were increased in 1936, adding a surtax rate on individual net incomes in excess of 10,000 pesos. Income tax rates of corporations were also increased. In 1973, the cedula tax was abolished, which appeared to be a progressive move, but in 1940, a residence tax was imposed on every citizen aged 18 years old above and on every corporation. Fiscal policy from 1946 to present. By 1994, there was a severe lack of funds in many aspects of governance such as the military and education sectors. United States advised the adoption of direct taxation, but the administration of President Manuel Rojas declined the proposal because he did not want to alienate its allies in Congress. The impetus for economic growth came during the time of President Elpidio Quirino through the implementations of imports and exchange control that led to import substitution development. By the virtue of Republic Act No. 2211, a tax commission was created in 1859 by the succeeding presidencies of Magsaysay, Garcia, and Macapagal, a commission to study the tax structure and policy of the country to make way for a more robust and efficient tax collection scheme. Post-war fiscal policy remained regressive, characterized and overburdening of the lowest class, the landed elite who held business interests were in Congress to ensure that the taxes would not be levied to them who belonged to the higher class of the society. From 1959 to 1968, Congress did not pass any tax legislation despite important changes in the economy and vested interest of Filipino businessmen, and Congress would manifest in any instances such as the rejection taxes on imports. Under the Marcos authoritarian regime, the tax system remained regressive during the latter part of the Marcos year 1981 to 1985. The tax system was still heavily dependent on direct tax, which made up 70% of total tax collection. President Corazon Aquino reformed the tax system through the 1986 Tax Reform Program. The aim was to improve the responsiveness of the tax system, promote quality by ensuring that similarly situated individuals and firms bear the same tax burden, promote growth by withdrawing or modifying taxes that reduce incentives to work, produce, and improve tax administration by simplifying the tax system and promoting tax compliance. A major reform in tax system was also introduced under the term of President Aquino, which was the introduction of the value-added tax. It was signed 1986 and was put to effect 1988.